Most of the time, some smart money setups comply with this rule, but some of them do not. In this video, the most important types will be explained. The first of the 5 rules of smart money: find the trend. You can recognize the trends of the financial markets in the style of smart money in the form of classic price action, which means that when the price of the ceiling and floor is higher, the market trend of that asset is bullish, and if the price of the floor and ceiling is lower, the trend. Its market is a bearish asset. Pay attention when the price of the ceiling and floor is lower. This style is looking for order blocks that can be recognized to open a deal. Thank you for liking the video. Let's go to the most important strategy from which you can learn a lot. The second 5 rules of smart money: finding critical areas. Perhaps if you have only worked with classic styles, it may be hard for you to accept that price will bounce back from supply and demand areas, but the reality is that the market mover is ready for a breakout level. He has made a decision, and this decision is formed in the form of a conflict. Maybe you have heard the name of trading nodes. These decisions are made in the heart of a node, and it is there that the price decides to break a level. So remember bases because of their decision makers. But where in these decision-making areas should you trade? The answer is in order blocks. Order blocks are candles from where the price has started to move, as shown in the image above. Where did the previous ceiling break come from? It is true from the first candle. That's why the candle of the opposite color that broke the previous ceiling is called an order block. If there is no opposite color candlestick, consider the weak candlestick in the direction of the trend in the order block. Boss is also the failure of the structure. If you read other articles of this style, BOS is also called BMS, both of which have the same concept. The important thing about block orders is that when your block order candle has a candle with a long candlestick, you can expect orders from the big guys, those who direct the market, to be loaded into the candlestick. You should have it be 2.5 times its own body. You can consider 50% of it as entry in order to have an optimal entry. Naturally, your loss limit is placed under the order block, but the loss limit is don't bet that you will lose with the least penetration outside the box and leave some space for price movement. The third 5 rules of smart money: where is liquidity? And the most important rules of this market: look for liquidity. Liquidity is where most stop losses are. Liquidity is the money that IT, market maker, banks, institutions, etc. needs to fill its orders. Where is this liquidity now? Pay attention to the floors and ceilings of technical analysis in the classic style. When the price is rejected and reversed several times in a zone, people have an idea that the price will react again when it returns to that zone. But what this time? Does it still react? This is exactly the concept of liquidity. If you still do not understand the concept of liquidity, know that you yourself are liquidity. The fourth 5 rules of smart money: where are the gaps? You may have heard the name of gaps, but only the opening and closing of the price will not create a gap. There are also price action gaps. One of the most important ones are FVGs. FVGs are a very useful concept in price action trading because they provide information about where a large number of orders have been injected, and this inefficiency in the market, an offer to the trader. This inefficiency can become a magnet for price in the future to remove this inefficiency because there are so many orders out there. A trader can use this information to target FVG. Well, the last point is to enter, but I'll tell you a secret that your win rate will go up. When you open a pause session, think about this. If you were a bank, where would you enter the liquidity area? Or should you say which area has high credit? If you enter before I have a block order before it is a block order, is there one? So the areas you wanted to enter are the liquidity areas, but the lower areas are the most important areas because the market makers hit the first areas to collect money and then pour down to our golden areas from this. Later, it can move very fluctuatingly to other ceilings. Thank you for watching the video so far. I hope you can make the most of it. Watch the video related to the strategy.